Howdy, folks. It's been a while, holidays, and I had some surgery and various things that happen in life. I want to get back on the train of talking about financial planning for high income families and individuals. And in particular, I want to talk about kind of the hot topic of the week, which this week was the launch of the initial Bitcoin exchange traded funds. And the reason why I bring it up is, I mean, it's got people's attention. The whole crypto world has had a lot of people's attention. We get plenty of questions about, how should I invest in crypto? Should I invest in crypto? How much should I invest in crypto? I'm not going to answer any of those questions. I am going to give some thoughts and some data on what these markets look like, in particular, three of them, Bitcoin, Ethereum, and Solana, and just talk about some of the characteristics. And then you can decide what works best for you. For myself, I have a small portfolio of these three particular crypto items. How small? It's 0.03% of my total portfolio. If you want to talk about why that size, for me, I'm happy to do it, but I won't do it here. Just give me a shout and we can have that conversation. So let's talk about the characteristics of these. I guess it's an asset class, in particular, investment options within the asset class. There are no operating businesses here. There's no cash flow. There's no income or net income. There's no revenue. The value is equal to whatever the next buyer thinks it is. It's difficult, if not impossible, to create any valuation model outside of this moment's trading price and just monitoring the trading environment. You can't build a discounted cash flow model on any of these products or speculate on the size of the balance sheet or any of that. They're all highly volatile when compared to something like the S&P 500. There's also a history of significant scams and thefts. Now that happens to the US dollar as well, of course. But there is a history of, billion-dollar thefts and scams. Now let's talk about the volatility piece, because to me, I think it's something you need to consider if you're going to put some dollars into any one of these products. So, and I've picked some points, not to cherry pick the data, although it is cherry picking the data a little bit, but to emphasize the volatility of it. And just FYI, if you take Bitcoin to begin with and you go back to 2017 when it was roughly $1,000, you'd be 43 times your money today, roughly. You would have been about 65 times your money in 2021, I think, was the peak. Then you got to 2022 when that $65,000 peak was down to 16,000. So you went from 65 times your money to 16 times your money. Now, this is the challenge, right? Is managing the volatility. But let's start with April 21 when we were at 63,000. By July 21, we were at 34,000. That's a 46% drop. By November 22, we're at 18,500. That's another 46% drop. Then from there to January 7, you were at almost 44,000. So 138% increase. On January 8th, it was at 46.9. That was the day of the launch of the ETFs, I believe. So you had a 7% gain. And then by today, January 12, you have an 8% drop. By any measure, that's a highly volatile asset. And so from the peak to the trough in that period, it was minus 71%. From the beginning of the period, April 21 to January 12 today, minus 30%. From the trough to the peak, 138% plus. The entire range of, minus 71 to plus 138 is a 209% range. So let's take Ethereum, which, by the way, is the big winner in this if you were a hodler and you bought and held. February 20 was $265, February of 2020. July of 2021, $2,517, an 850% gain. By May of 21, it was $37.20, so you add on another 48% plus. Then you go to April of 22 for May of 21, down 7%. June of 22, down another 24%. January of 24, down another 19%, so $2,109 at recent price. So that range is about 1,347%, top to bottom. If you bought it right at the trough and held it to the peak, 1,304% was your gain, so 13 times your money. If you held it from February of 2020 to January of 2024, you get a 696% gain. Outstanding results, incredible volatility. Solana is a much narrower window. September of 2021, $140. As of a few days ago, $102. That obviously is a negative performance from the beginning to the end of minus 27, a range of 135%. Volatility in between by November of 22, up 69%. By April of 22, down 44%. By December of 22, down another 63%. And between December of 22 and January of 24, up 108%. So again, tons of volatility. Let's look at the S&P 500 in the same window of April 2021 to January 2024. So April 2021, 41.85. July of 2021, up 6% at 44.42. November of 22, down 11%, 39.65. January of 24, 47.74, up 20%. So first to last, 14%. Peak to trough, minus 11. Trough to peak, plus 20. The range, 31%. Minus 11 to plus 20. Now let's talk about potential results of the Bitcoin ETFs. So there's a limited supply of Bitcoin. There's 21 million of them. You would think it would increase demand by making them much more accessible in a typical platform that investment advisors and less technical people can understand how to use it, can easily buy and sell. I would expect the price to go up, at least for a period, and at least from what I'm looking at over the last week, that period was roughly 1 day. So we went from 43.9 to 46.9, back down to 43.4. So what are we concluding here? I'll tell you what my conclusion is. The various crypto coins are highly, highly speculative, and some more than others. You could make a lot if your timing is good. I mean, a lot. 1,304%, pretty good gain. By the way, there was a gentleman that bought a 250 GTO Ferrari 38 years ago for $500,000. It recently sold for net for him $47 million. His compounded rate of return on that was 12.7%. Also highly volatile, but fun to look at. I'm a car guy. But back to the topic at hand. You can lose a lot if your timing is bad, and for many people it has been. You can't build a financial model, do sensitivity testing, forecast the P&L, forecast the balance sheet, forecast sales. You can't do any of that. It's extremely difficult to do anything other than speculate. We don't hear about the hodlers, hold on for dear life, for the most part, who got killed in this market. We hear about the winners. And that's, of course, exciting to us. It gets our brain stimulated. Could this be the advent of a replacement for currencies worldwide? Sure, it could be. How long is that going to take to happen? Don't know. When do we have the full faith and credit of the United States or of the European Union behind an electronic, cryptocurrency? Don't know. If rapid up and down swings disturb you, this is not a market for you. Because you will sell when it's way down, you will load up when it's way up, and your investor behavior will not benefit you, for sure. We've seen that time and time again with highly speculative assets, not just crypto. The big winners in this period, buy and hold Ethereum and Solana. Who knew? I hold a little bit. It was my choice, but I would call that luck. And again, if you go back to 2017, you would have made about 43 times your money in Bitcoin to date if you sell it today. If you could manage through the plus 63 to plus 16 drop, which would be a huge reduction in value. So that's my thinking. I'm happy to have a conversation. Please give me your thoughts. I think the next topic here will be on disability insurance. Boring, but worth a conversation. I hope you're well, and we'll talk to you soon. Bye-bye.